and let us know and ask any questions that you might have during this podcast or after. We'll do a question answer at the end if there's any questions. So I'll let John take it and tell a little about what we're doing today.
Well, hey everybody, it's John here, Coffee with John and Adam. This is our second installment. Last week we talked about what is a pre-qualification, what does that mean, some of the things to look out for and be mindful of. This week what we're going to be talking about is the next step after pre-qualification, which is finding the right house. Finding the right house, there's a lot of factors involved with that. I mean, it starts with what you're specifically looking for, but the next thing is finding the home. Now, the general population, we do not have access to the MLS database, which real estate agents do. Not only that, but I mean, real estate agents are versed with, what homes are available. They're aware of many things that we are not, as it pertains to what's out there on the market, what they can find, where it's at, what you're looking for, maybe even show you some things that you didn't know that you wanted. So one of the things that we really want to talk about is, once you have got that solid pre-qualification, you really need to try to get set up with a solid real estate agent. And, this is something that Adam and I, we work with real estate agents day in, day out. We know the ones that do work. We know the ones that negotiate good deals. We know the ones that stick through with the customers until the end and get things done. And, there can be something, not many things can be more frustrating than, getting with a real estate agent or anybody in any business that just isn't meeting your needs or expectations.
Again, thank you, Heather Storm, for watching. Looks like we're starting to have some people come on.
Yeah.
Like John was saying, it's always good to have a good real estate agent, who's seasoned, who's been doing
My
this.
coffee cup.
Been doing this for a long time, who also communicates with their lender, making sure, that they're pre-approved, not just for loan size, but for payment-wise. I've had so many customers throughout the years that saying, hey, I want to buy a $300,000 home. And I'm like, okay, all right. And I'm like, what's the max payment you want to pay? And they're like, oh, I want to pay $800 a month. Okay, well, you're not going to get a $300,000 home for $800 a month.
We'd like to.
Yeah. So, I mean, if it was a negative AM back in the day, then maybe.
Yeah,
but so it's kind of just setting expectations, letting the customer know, hey, if you want your max payment being this at $800 a month, then you can only buy this. Now, if you want to buy a $300,000 home, your payment's roughly going to be this. Can't tell you, maybe within $100, in regards to your taxes and insurance, but it just has to be communicated with the agent and with the customer as well. It's always setting those expectations, and a good realtor is always going to set those expectations as well and team up with us. With that said, with USDA, FHA, VA, conventional, depending on how much you're wanting to put down on the home, with each program it's totally different. FHA and USDA, 6% seller concessions. When it's VA, the seller can pay up to 4%. And when it's conventional, is 3% if they're doing the max loan to value.
Just to touch on another real important thing, whenever you're out there looking for a house, one of the things that's very, very tricky is it's like, am I offering am I making the right offer? Am I lowballing this thing to where it's not realistic for the seller to accommodate me on this sales price? Or maybe does this person have more equity to play around with, that I know about? It's like, how do I know that I'm making the right offer? That's one of the things. I mean, a real estate agent, a good agent, is going to be able to, they're going to be able to, see when that house last sold. They're going to know what the seller paid for that home whenever they bought it. And so it's like by doing that, you have a good indication, because as Adam was talking about with the seller concessions, which is essentially when the seller pays the buyer's closing costs out of their proceeds. So, I mean, when you're doing that, whatever amount you're asking for the seller to pay comes off of their gross. So in order for the seller to be able to accommodate that, they have to have enough equity in the home. And it's like, how do you know that they have that? I mean, maybe you're looking at a house that this place is selling for $150,000, and this person bought the house 2 years ago for $152,000. Well, I mean, you're going to know right there. I mean, a good agent, they're going to know that you do not have the room in that sales price, to build in $5,000 or $6,000 of closing costs, taxes, insurance, or whatever.
Right.
So,
Yeah, it's a big thing. I mean, you want to make sure that, I mean, like John was saying, a good agent is going to pull all those comparables and know where it's at. And by the way, hey, Kara's watching me instead of you, by the way, your wife. So,
hey, well, hey, you know what, Kara? I'm drinking out of my cup. See?
Hey, Michael B. It's been a long time.
Yeah.
Michael B's from California. We used to work together when I lived in California. How you doing, Michael? But yeah, you want to make sure that get with a good realtor. If you do not know one, give myself or John a call. Like I said, we've been doing this.
Don't be out there in the middle of the ocean.
Almost 40 years between the two of us. So, I mean, we've been doing this such a long time.
That doesn't mean I'm that old.
I might be.
Maybe. Not me. I'm like 22 or 3. I don't know.
24, maybe.
Yeah, like that.
But yeah, Kara says she hates your cup, by the way.
She loves that cup. Just don't show the boys. The thing is after you find the right house, after your agent is negotiating a good price on this home, whether or not your resources allow for you to pay your own closing costs, or if the seller needs to pay your closing costs, after that happens and the offer is made. The seller could come back, they could counter offer, maybe you offer $155, but then paying $5,000 closing costs. Maybe they come back and say, well, we'll pay $5,000 closing costs, but we want $157. So, I mean, until the deal is consummated and purchase agreement is signed between all the parties, the next thing that's going to go into that is, you're going to be looking at inspections for the home. Generally speaking, for us as lenders, most loans are just going to require, an appraisal, for that specific loan product, and they're going to require like maybe a termite pest inspection, something like that. Appraisers, when they go in to look at a home, they're looking for, all the earmarks of potential problems with a home. If they see some water in the ceiling, then, that could be an issue of a problem with a roof. Maybe there's more than 2 layers of shingles on that roof. That could call for maybe a roof inspection. Maybe you've got some cracks on the outside brick in the house. That could be settling, normal wear and tear on a home, or it could be an indication of serious structural damage that, we don't know about. So for that reason, it's like the appraiser can potentially ask for more inspections to be made. But if it's completely possible for an appraiser to miss things, which is why you have the freedom in a purchase transaction to get all the inspections you want. You can get a structural, you can get a roof, you can get, a general home inspection. But I would say personally, you can never get too many inspections.
No, and the best way to do it, because your realtor is going to have their contacts in regards to who to use for inspections that they use on a continuous basis. And a lot of times they'll just do like a package deal, which will save you money. They'll do a full inspection, and it will also include a lot of times the termite inspection. So you're not having, inspection for this, inspection for that. They'll have like a package deal. You pay all at once, and that way it's a lot cheaper for you. So it's always good to ask your realtor before you start doing these inspections, because they're going to have these contacts for you to be able to help you out in that regards. And all the good realtors have their contacts to be able to make it as cheap and easy for you as possible. I'd always recommend to have a full inspection done, because the appraiser is not going to catch everything. The inspector is going to be, checking everything a lot more than an appraiser is going to be, and he's licensed inspector. So, and then when it comes to USDA and VA, you always have to have a termite on those 2 programs. You at least have to have a termite. And then also a good realtor is going to make sure if you're comfortable with the insurance on your home, in regards to making sure, hey, this house might be a little more expensive on insurance, but it's going to be cheaper on taxes. And the reason being is because, hey, it's rural, and at the same time, your nearest fire station is 10 miles away. So, your insurance is going to be higher. And they'll prep you for that, and so will we. So that's always good to have, to ask your insurance agent about the taxes on the property. That gives us more information in coming up with your estimated payment.
And we have lots of contacts within, within the insurance lots of different insurance agencies, all the top names, and some of them that are kind of that can work with more unconventional properties that are maybe further away from emergency services, which usually prompt for a little bit higher rates. But something that I like to always point out to people is whenever we're shopping as consumers, I mean the general perception about buying things is like cars, for example. Whenever you want to buy a car, if you want to get the best price, you don't want to buy the brand new car off the lot. It's like, you want to buy one that's a couple years old, you save a lot of money. And that's true with cars, but it's not always true with houses, because you might be able to pay a little bit less for a home that's, 20 or 25 years old, but you're going to be looking at higher insurance premiums. So you could potentially have two houses that are both $150,000. And because one of them was built in 1980 versus maybe a new construction home that was built 2016, I mean, I've seen insurance premiums for, $200,000 homes be as low as $70 a month. Whereas you could be looking at a $120,000 house that was built in 1975 and have an insurance premium that's $150 a month. So, I mean, people get tied up in interest rate, which it's great to have a low interest rate, but there's other things to pay attention to. Your homeowner's insurance is a humongous thing.
Yep.
Who you choose for homeowner's insurance, how much that premium is monthly. Right. I mean, an interest rate, an eighth or a 1/4% on a $150,000, $200,000 house. I mean, that's not a whole lot of money, $25 maybe. Yep. But it's like when you get the homeowner's insurance, I mean, you could have two different houses, two different insurance companies. You could have a $100 difference a month on the insurance premium just because of minor details that could possibly be adjusted. So, those are also things to be aware of. And it's like Adam said, I mean, you are going to be spending a lot of time with that real estate agent. They're going to be driving you around in their car, most likely. I don't know. Some do, some don't. Yep. But, they're going to be giving you a lot of guidance in these areas. And I mean, we're going to make sure that you've got a good loan. We're going to make sure that you have a solid pre-qualification. But, when it really comes down to it, when you're out there looking for a house, your real estate agent, I mean, they are, our eyes and ears. I can't tell you how many times I've had a real estate agent, bring a purchase contract for a home that appraised $15,000 under what the sales price was. I mean, I don't think that there's a reason for that. I mean, I think that a real estate agent should generally know the comparable sales for the home you're making an offer on and be able to, make a ballpark estimate within a few $1,000s of what this home is likely to appraise for and whether or not the price that you're paying makes sense.
Yeah, and that happens from time to time again, and it's not necessarily always like the realtor's fault. Sometimes the lender they're going through has a bad AMC or
appraisals are a matter of opinion.
Had bad luck with a certain appraiser with that appraisal management company. The good thing is a lot of times when those come across with us, we are always able to dispute those. Yep. If there's value to be made, we get that added value.
You do have appraisers that they miss comparable sales. Some of them use adjustments that are not necessary.
Nick's got a question.
Well, what's that? What if you are a fireman? Does that make insurance go down? There are some insurance companies that have programs for police, fire. Yeah. There's also what is the Fannie Mae program where you can buy? It's like no down payment, home possible maybe.
It's close. It's 97%.
Yeah. But Nick, I mean with homeowners insurance, there's definitely some places out there. I mean, it's something that you would just need to ask your insurance agent about, and they can make the call on whether or not that can
things
fit
vary
in that category.
Yeah, things vary with each agent. That sometimes if you're a AAA member, you're going to get some off. If you're a nurse, which my wife's a nurse, so hi Erica, if you're watching.
My wife's a brain surgeon.
So you can get get a percentage off your insurance policy just depending on your position or your job that you're at sometimes. And another weird one is if you have dogs. If you have dogs, that might come up as a question and your insurance can go up due to having a dog.
Someone asked me to say Corey.
Oh, yeah, I saw that. Corey!
Hey, yo, Corey!
Let's see who's watching. Okay, Jimmy Eubanks is on mine watching now, and Daniel Marcus. Hi guys. Looks like you got a lot of people watching, John. You're more popular than I am, obviously.
I'm not popular. They're delusional.
They're delusional.
No. Yeah. Well, absolutely. Hey, Dick Gillespie, you will be getting a call from me very soon.
Yeah.
I'll be with you real quick, buddy. I know. So, well, hey, I hope that you guys had a good time. I hope we provided some good information.
Yes.
So now that we have covered pre-qualification, we've been talking about today, finding a realtor, finding the right home, some variables that can happen, when you're in that process. If anybody has any questions, feel free. You can always reach me on my cell phone, which is 918-630-1991. You can email me at jon.fleege@snmc.com. Or you can call up here at the office, 918-286-1226. If you need to go over any kind of questions whatsoever about what we talked about today or anything moving forward, give us a call.
Yeah. Just give John a call, or you can give me a call. My number is 918-852-7800. You can reach out to me on Facebook. You can email me. It's adam.fury@snmc.com. If you're looking for my spelling of my last name, it's on my Facebook page, so you won't be able to miss it. So, is there any more questions?
I just saw a question come through. Selena, Corey's wife, she's asking about what about being self-employed. Being self-employed is an entire other topic, and it's like we have planned on actually covering different types of income and employment.
Right.
Self-employment in general, usually you're going to need to be self-employed for at least 2 years. You're going to average the 2 years. There are a lot of details, though, to tax returns. Now, we've had these things, time and time again. It's like I've had people that have come to me and they said that, there is no way I can get qualified. I've been turned down everywhere that I've gone. And it's just because, maybe depletion, for example, can be added back into the adjusted gross income. And, there's a lot of lenders out there who will, they don't add back in the depreciation, the depletion back into the adjusted gross. They don't get a high enough income, and it doesn't work. Debt ratio is too high. So then, we're going to cover that in another
topic.
Another segment.
Right.
So, hey, Selena, if you guys have questions about that, feel free to give me a call, and we can talk about it earlier. But, for today, I think we got it all, Adam.
Yeah, I think we've got it pretty much wrapped up. If you guys have any more questions in regards to just, finding a good realtor, or in regards to insurance, taxes, minimum payment, all that stuff, just hit us up if you haven't had the chance to ask any questions during this live podcast.
I got a quick one real quick. Alicia Skaggs, she put out a very good question. She's asking about, what about flood insurance? How many deals have got ruined because of flood insurance? That's another thing. Real estate agents, if you are dealing with a pro, they are going to know the FEMA flood map. They are going to know if this home is in a flood zone. I'll tell you how big of a difference flood insurance can make, because usually we will do our flood certification towards the end of the loan approval process, after appraisal's been ordered, after a lot of things have already been done.
That's what most lenders do.
Yeah, and it's like if you get up to the end and you find out that your home happens to be sitting in a flood zone, even if the corner of your property is in a flood zone and there's probably no chance that this place is ever going to flood, the way that the FEMA flood map works is, you are going to pay flood insurance. A lot of those flood insurance premiums are just as expensive as the homeowner's insurance premium, and it can really ruin a transaction when you get to the end of it and find out that there has to be maybe an additional $150 per month for this flood insurance. An extra $150 per month, that could be a potentially $30,000 more house you could buy. So to have that just unexpectedly thrown on a loan can be a big problem.
Yeah, and like I said, a lot of other lenders order that towards the end. With us, though, it's a click of a button. Literally, it takes us 30 seconds. We go into the file, we hit order insurance, life of the loan, and we hit submit, and 30 seconds later, it tells us it's in a flood zone or not. So if an agent is curious to make sure that it is or isn't, or the classification of that flood insurance, we can get that just like that and have that information and get them hooked up for the flood insurance between ourselves and the agent and the customer working together as one.
Yeah. Well, hey everybody, I guess we're out for today. I really enjoyed talking to myself on this screen, and I guess I'm communicating with people so good. Well, Adam, hey,
Yeah.
let's get out.
Out.
All right.
You guys have a good one.